amazing equity curve. And imagine this is only from trading seasonal pattern twice a week. Seasonal strategies are great addition to any portfolio. In today's video, I will show you how you can build this equity curve from only 2 seasonal patterns on one instrument. So you'll be using the same capital to trade this strategy twice a week only. Hello everyone, Ali Casey here from StrategyQuant channel, where we discuss finance, investing, and algorithmic trading. I put seasonal patterns as one of the top priorities when you're trying to diversify your portfolio. Diversification doesn't come from changing your instruments. It actually comes from the style of the strategy as number one. So when you are building breakout or trend following, mean reversion, or seasonal patterns, those three styles are so much different that you can easily combine them in a portfolio and get the highest diversification possible. So how do you get these seasonal patterns? Well, you need to look for them in every instrument. Most instruments have seasonal patterns, especially agricultural products that are represented by futures. Of course, you can look for longer term seasonal patterns, but as algo traders, we are short term traders to try to compound our account as much as possible, as fast as possible. So we are looking for short-term patterns, and you can get to that by doing some data mining. So using the StrategyQuant's market seasonality, we can have a heat map of every instrument we like. And here I loaded the soybeans market. And this is the day of the week marked by every hour. So these trends are on hourly basis, and we can easily track that we have a drop from middle of Thursday all the way to middle of Friday. And if it's not clear, we can check it here in the win-loss average. So this is middle of Thursday. So if we can start, we can see here, this is negative. So if I bring all this, so on average, I expect to make $95 by shorting Thursday at 7 a.m. and closing my trade at Friday 13 p.m. Now, of course, this sheet, it's only showing us the average, so you still need to test this in your trading platform. By the way, this sheet, along with many other tools, are included for free with the Algo Trading Masterclass. So here is the strategy coded in easy language. We will enter on Thursday, so this is day of the week number 4, at T entry, which is 600, so that's 6 a.m. And we will exit day of the week 5, that's Friday, when the time is greater than 1300, which is 1 p.m. So here is the strategy on soybeans. So the top section is the 60-minute bar, and the bottom section is the daily bar. So right now we are not using the daily bar, and we're only trading on the 60-minute bar. And here is the trade. So this is Thursday 7 a.m. so remember, we calculate on 6 and we enter next bar, so that's 7, and we are exiting on Friday at 13:20, which is the last bar in the chart. Now I'm using data since 2006. So if we look at the performance report, so this is how it looks. I mean, it's mostly up, but we have a lot of drawdowns here. And look at the performance summary. So we have 775 trades, making $46 on average. Now that's barely enough to cover slippage and commission, because I'm not using slippage and commission here. So if you include one tick in and one tick out commission, that probably will be $30. So 46 is profitable, but I mean, you know, it's not comfortable. And this is our first clue that the strategy is good, because we picked the analysis and we tested it, and it works. It works on multiple years. And although this is still rudimentary, we didn't introduce any filter yet, but still it's already profitable. I mean, barely. So here are the periodical returns. We are losing 2007, 2009, 12, 19, 20, and the current year also 22. But overall, we are profitable. And of course, we have a drawdowns here and here. So now that we know the strategy works, we will introduce some filters. So I added very simple filters. So the first one is true. So then if we add it, that means nothing happens to the strategy. The second one is only the moving average. So I'm looking for a trend to go down. So I want to short with the trend. So here I pick the 10-day moving average. It's a short-term trend. And basically, I'm just looking for the moving average of 10 days to be lower than the previous day. So I'm just looking for a tick down in the trend. And you notice this is on data 2, so we're calculating this on the daily time frame. And then I have another filter, which is only 1 day. So I'm calculating that yesterday was a down day, again, as a trend filter. So I want to short with the trend. Okay, so now let's introduce filter 2. Filter 2, which is the moving average. So it's a trend filter. So a trend filter is really good. We went from $45 on average to 76. So that's 50% enhancement in our average trade. And we can see the performance. This is a little bit shallower than before, and we reduce some of the drawdowns here, and this is still a big drawdown, but definitely it's an enhancement. We can look at the periodical returns. It's also a little bit of an enhancement. But we are making less money because we have almost half the number of trades. So now let's try filter 3, which is again a trend filter, but using only 1 day, which is the previous day. And again, this is very good filter. We make more money and our average trade goes a lot higher, and we still reduce the trade by more than half. So this is really good. And if we look at the performance graph, again, much better graph right now. We still have this drawdown, but that's not a big deal because now the equity curve looks much better. And of course, we can see the enhancement in the periodical returns. So good. So we will fix this as number 3. Now I can optimize these numbers. So right now we're entering at 6 and exiting at 1300. So we will optimize the entry and the exit. The entry will be optimized from 1 a.m. to 9 a.m. in step of 1, of course, because we are doing hourly. And the exit will be optimized from 10 a.m. till 2 p.m. So we have total 45 tests. And we can see the highest net profit comes from entering at 3. So that means we enter at 4 because the logic calculates at 3, and exiting at 13 p.m. because we're calculating at 1200. And you can see the original entry is number 17. So it's entering 6 and exiting 13. So we can see now we're making 53,000, averaging $147. And the performance graph looks excellent. Periodical returns looks very good. Now we have only 1, 2, 3, 4 years down years since 2006. So this is great. This is already good on its own. You have one pattern. You're trading 1 day a week, shorting Thursday morning, exiting Friday end of day, and that's it. You can do this every week. Of course, now since we introduced the filter, it's not going to be every week. In fact, we slashed the number of trades to half. So that means probably on average, you're doing it twice a month. So now let's look at the other pattern. Now the other pattern doesn't show up in the graph clearly, but we can see it clearly here. So this is Monday, and you can see that if I short Monday starting at 2, look at this. These are all down except for this one plus. And again, my average is about $100. So I should expect to make $100 if I short 2 a.m. all the way to 1 p.m. on Monday. So I just added Monday here. And again, we have the entry and day of the week is 1. That's Monday. We exit also with 1. And we will test the best entries and exit. So right now it will be tested with 600 and 1300. So already it looks very good. We're making $75,000 without any filter. Average trade is $97. Periodical returns, now we have only 2 years that are losing money. So combining this pattern with the other pattern, we already know that we will enhance our equity curve. And the performance is amazing. And there is no filter introduced in it at all. So first, let's optimize the best time to enter. So again, we'll optimize 1 to 9 and 10 to 14. So that's 45 strategies. And now if we sort by net profit, we can see that entering at 1, exiting at 13 is the best. And our original pick sits at number 3. So here it is, entering at 2 and exiting at 13. They are very close in drawdown and very close also on profits. Of course, this is much better. So let me pick this one. And now we can see we are making 85,766 trades. So that's double the number of trades of the first pattern because we didn't have any filter yet. And we're making 112 on average, which is plenty enough to cover slippage and commission and still have a lot left over. Periodical returns, only 2 years losing. and performance graph is excellent. So now let's try to add some filters. So if I introduce the filter again, this is a trend filter only using the moving average, and we reduce the number of trades by half. Also, our average trade drops significantly, almost 50%. Of course, that's not good. Let's try now filter number 3, which is only 1 day. So again, we are going with the short trend. And again, that's not a good filter. We reduce the number of trades by half, but again, our average trade drops significantly. So that makes me wonder maybe if we flip the filter. And as expected, flipping the filter makes a huge difference. So we reduce the number of trades, 391. We're making less money, but our average trade is higher. So this is an optional. And let's see the periodical returns. So we still have 2 losing years, but now we are losing less. And our performance graphs looks better. I mean, they're both good. And I would rather that I will not use the filter. So let me take this filter off. So I put filter 1, which is true all the time. So that means there is no filter. So now the numbers are hard-coded. So this is the time. We're entering at 3 and exiting at 12. And the Monday pattern, we're entering at 1, exiting at 13. Of course, we're entering on the next bar. And we're only using 1 filter for pattern number 1, which is on Thursday. We can use the opposite with the other pattern on Monday. I just chose not to use it to make more money. So here is the performance now. From the 2 patterns, we make $133,000. 1126 trades, averaging 118, which is plenty. And this is our amazing equity curve. Of course, we still have a drawdown here, which happened in 2006, 2007. 2013 was a loss, and currently this year it's a little bit of a loss. Now we still can add a little bit of protection. So this is the protection. It's just a 2 times the ATR for profit target, and 3 times ATR is the stop loss. So this should not have a big effect because it's a little bit further away from the price. So this is only a protection in case the market run away on any direction and we need just to exit the market. So you can see the effect is very small. We went from 133 to 137. So the effect is very small, and I will consider this as protection. Let's see, performance graph is still looking very good, and periodical return. Now, so 2006 went to 0, and we're still losing 7, 13, and 2022. Excellent equity curve, 2 patterns only, 1 filter. That's how robust the seasonality can be, especially on agricultural products. And of course, when you add seasonality strategy to your portfolio, remember the driver is totally different. So it will be an excellent diversifier to your portfolio. To learn more, make sure to watch these videos, and I will see you there.